Today we are talking about crypto. We're talking about Bitcoins. We might touch on altcoins. We might explain what it is, how it all works. Should you buy Bitcoin? Should you buy crypto? What should you do? How much should you own? And today I'm coming to you from, where are we?
Benalmádena, España.
So, yes, we are coming to you from Spain. If you are watching this on YouTube, we're sitting in Nick Bradley, my co-author's living room, and it might look a bit primitive, but we've got my camera set up, an iPhone and a GoPro, so hopefully we can get something. If you don't know Nick, grab that book, Nick. Nick and I wrote the book, The Quick Start Guide to Investing, and you can grab a copy of that wherever you get good or bad books, and it's really great. Thank you so much for your support. We're now selling them direct. If you want to buy it from us, you can do that on our website, and we will get it to you. But, Nick, we've got to talk about Bitcoin.
We do.
And we kind of, even before I hit go on this, you were having a go at me because I was being a bit skeptical, and I think it'll be a really great chat. This episode came about because a friend of the podcast, Trinity, and I'm going to have her on. I met her at Newcastle University when I was doing a speech there, and you know, she came on the business show. I'm going to get her back on the main show just as a bit of a guest host because she's a lot of fun and really a listener advocate type questioner.
Sure.
And she said to me the other day, hey, can you do an episode about crypto? And I'm like, well, actually I might because I haven't done one for a while. And I said, look, do you want to just send me some questions? And she did. So anyone out there, if you want us to do a themed episode, help produce the show, send in 10 questions about a topic because, and you joke, Nick, that I'm outsourcing the production.
Yeah. Oh, well, it's genius. I mean, as any creator would want, would you please do the work for Glenn?
No, but the reason is, and this is why we go to the Facebook group for questions, you really, like, because we're in this money world every day.
Sure, yeah.
And
you forget what you know.
That's right. And sometimes we'll dive straight in and we could put this episode together and we're like, hang on, we need to explain what the blockchain is. And
you put like an hour's worth of research and then a couple hours of prep, and then you actually do an episode and your audience is like, what?
Yeah.
No, like take me back to the beginning. Like, I don't even know what you started with. Or you do the exact opposite and you start something like, yeah, we knew that. Duh.
Yeah,
so it is great to hear from the audience.
Yeah, so you can't win. Anyway, my name is Glen James, joined by Nick Bradley, my co-author. You've got a YouTube channel, Nick.
Yep, 15-minute money. Fairly new, but we're growing and liking it.
Yeah, you used to host our This Is Investing podcast.
I did. People loved the American accent too much that they were like, oh, it's like too good. Can you just slow down a little bit? You get it.
Yeah, so we'll put a link to Nick's YouTube in the comments and all that stuff. As I said, my name's Glen James. We're doing money, money, money. This episode is brought to you by CoinSpot, Australia's home base for crypto, supporting over 3 million Aussies. A couple of things with this episode. Number one, CoinSpot, they have partnered with the episode. We actually recorded the episode, as you'll hear, before I actually reached out to CoinSpot because we had been talking before because I personally use CoinSpot and they were keen to jump on board and support the podcast and the episode. You can get started easily on CoinSpot from $1. Also, if you use the code MONEY times 3, that's MONEY X3, when you sign up, you'll get $20 of free Bitcoin right into your wallet after your first deposit. So there you go. Thank you to CoinSpot for supporting the podcast today. Finally, before we do it, I recorded this with Nick Bradley when I was in Spain a few weeks ago. At about 45 minutes in, we had a technical issue and the mics failed. It was actually the SD card. For those people who are in tech, I've lost my good Sony SD card and Nick had one laying around and anyway, it failed. Almost at the end of the discussion, you'll just hear the audio from the camera in the room. But otherwise, CoinSpot, they've supported this podcast. They actually had no editorial control. They just loved the content that we did because I sent them the podcast after we recorded it. So thank you to CoinSpot for supporting the podcast. And if you're listening, remember, Money X3 in the show notes. If you did want to, maybe put your foot in the water with some cryptocurrency. Now, I will say, we don't have to be scared about this. If you don't want to do it, you don't have to do it. But if you're interested, CoinSpot will spot you $20 to get you started. Let's get into the episode right now. Before we get into it, this show is general advice only, and I've got a license to provide that advice. Full details can be found in the show notes. I'm a former financial advisor. Now I do the Money, Money, Money podcast. If you're a regular here, we call it M3, and we do a podcast called Retire Right. I've got a book, The Quick Start Guide to Investing, is available wherever good books are sold. There's a link in the show notes if you want to turn up your investing to 11, or if you're just getting started. Let's get into it. Thank you so much for being here today. Okay, Nick Bradley, thanks for coming back on.
Thanks for visiting me.
Now, and we'll actually, if you are new to the podcast world, we'll also put a link in this where I interviewed Nick about his own journey. So you're American, sorry, apologies.
I like to say Alaskan, just to be clear.
You sold everything and moved your family to Spain, and you've effectively fired.
Yeah, so quit the regular job that I had working for a nonprofit company. Sold the house, and now I'm doing basically weekly options trades, doing a little bit of dividend portfolio, starting to work on the YouTube channel, and I'm living this life, 24/7. So right now the kids are at school. I've got some free time. This is when I do a little trading, do a little podcast stuff, and the kids will be home terrorizing the place. We'll go to the beach, we'll go to the pool, and I guess you do want to say the fire lifestyle.
That's right. And we might do a little short after party at the end of this episode because I'll explain a little bit about Nick's own YouTube and all that stuff. Okay, high level, let's explain the blockchain. And I said to you, can you explain it? Because it's one of those things, like we get what it is, but to explain it simply can be confusing.
Sure.
So like all good content creators,
you went to the AI.
I went to the AI. And
they did a pretty good job.
It was pretty good. I said to AI, can you explain the blockchain like you would to a 10-year-old? And I just think it's really important to note, Nick, that when we talk about crypto, that means Bitcoin, that means Solana, that it's the whole thing. It could be Trump coin, it could be, I don't know, all the wild
everything from
rubbish.
The good coins to Bitcoin to the worst, as you just mentioned. Yeah.
So we say crypto, we mean everything. Sometimes people say Bitcoin and they do mean everything, but that's kind of not really a purist thing.
Cryptocurrency on a ledger called the blockchain.
That's right. Now, Bitcoin is on its own ledger or its own blockchain.
Yep.
And I think before I'll read this and then I'll give some other practical examples, because I think once you understand the concepts, things, are a lot easier. Imagine you and your friends had a notebook where you write down every time someone trades Pokemon cards. Everyone has the same notebook. Instead of one person keeping track, everyone in the group has a copy of the notebook. So think traditional banks, right? There's a central bank and they hold the ledger for all transactions in and out.
You just made every crypto person mad by comparing a blockchain to a centralized bank. But anyway, keep going.
We're here now. So the second point, you can't erase old trades. So once a trade is on the notebook that everyone has, it can never be erased.
Permanent marker.
Public. And you can look at all this stuff publicly online. It stays forever. You can only add new ones to the blockchain. Point 3, everyone checks the trade is fair before it's added. If you say, I gave Jess a Pikachu for 2 Charizards, everyone looks to you to make sure you actually had the Pikachu to start with. If it's true, everyone writes down the same time that it was traded.
Sure.
If it's not true, no one adds it.
Yeah, that's part of the mining process.
Yep.
So when people are saying mining crypto, they're really confirming what the Pokemon transaction in this analogy is true. The miners, the computers that are set up within the network, are helping verify that's what's going on.
That's right. And the fourth point is no single person is the boss. No teacher or parent controls the notebook. The group keeps it honest by all agreeing together. So it's multiple parties verifying transactions. So one thing that we need to, when people say blockchain, you don't have to get tinfoil hat on and like, oh, it's risky and all that, because it's just the technology. And if you Google ASX blockchain, like the ASX in Australia spent millions of dollars trying to get its own internal blockchain system happening to verify share trades, but it was a disaster. But and this is where I think the technology is rock solid and the technology is very good. And I reckon companies like Ticketek and Ticketmaster, they actually need to operate tickets on a blockchain to stop fraud. And effectively, and we might get to it later, but that means the you may have heard the name NFT, but forget that for now. But that means if I buy a ticket to Taylor Swift concert, I've got the original one, and if I want to sell it to someone, it can be verified by the blockchain that it is real.
Yeah. Notre Dame, the University of Notre Dame in Indiana, not in Paris, I forget if they actually did go through with it or not, but they had talked about putting the football tickets, which American football, big deal, college is crazy. Notre Dame probably has 80 to 90,000 people every Saturday going to their games. And so tickets are a hot item. My buddy's got season tickets there. He's got 2. And I think it was a couple years ago they had talked about creating all of those tickets as NFTs. So you had a digital thing, and then they'd probably print the ticket off as well. But even with the printed ticket, it had to match to the blockchain. The non-fungible token was going on there. So you had like a cool thing on your phone, and it was uncorruptible. You knew you had your ticket. The transfers would be easier. You cut out the middleman. You don't need Ticketmaster at that point.
No.
If everybody started using the blockchain.
In theory, Notre Dame or whatever it is.
Indiana people say Notre Dame.
Yeah, so they would effectively write the contracts,
they would become Ticketmaster.
Yes. Yeah. And then just throw them out to the blockchain.
Yep.
And then at the end once the game's finished, sure, you might hold that in your wallet, but it's dead.
Right. You'd have like an image of your favorite player or whatever is on there. But yeah.
So I think it's just really important to note that the technology that we're talking about, the blockchain, is 100% awesome, 100% solid.
Yeah, and that's one of the very few things that I actually agree with the current Trump administration in America is that I don't think that by any means Donald Trump knows anything about the blockchain or how things work, but he's got smart people who are working with him, and they are actually talking about creating stablecoin legislation, which has recently passed, and they'll be using the Ethereum blockchain to put out these stablecoins. So basically every bank in America is going to have a digitized token, and that needs to happen. Like Robinhood is going off the charts right now, and I don't want to get distracted, but Robinhood's stock is skyrocketing. Looked like they were just going to be a meme coin. They kind of got in trouble a couple years ago for pushing people into GameStop and to AMC and stuff like that. But what they've done is they have tokenized the investment trades, and that is giving them a step above all the other brokers out there, because your trades are actually quicker, faster, and safer when you've tokenized it. So now the Trump administration is pushing a lot of the U.S. banks to actually start tokenizing their assets.
And I might just make a note, and we'll swing back around to you mentioned stablecoin, and we'll talk about that later. But once we understand the blockchain, it's a public ledger that verifies transactions and trades. It's then important to note that different cryptocurrencies sit on different blockchains. So, for example, Bitcoin has its own blockchain and there's no other coins on it.
Bitcoin's basically its own thing. It's like people are referring Bitcoin as the gold standard. You know, you're buying gold as a safe haven. People are looking to Bitcoin, even though that might be a different kind of thought for a lot of listeners. Bitcoin as digital gold as a safe haven. And then a lot of the other cryptocurrencies and blockchains are new technologies, where Bitcoin is trying to compete as a flee to safety, a safe asset, digital gold. Something like Ethereum is trying to create this technological blockchain that other coins can be built on. Solana is similar. They've created a blockchain that other coins can be built on. So some things are like a technology where Bitcoin is trying to be like a lump of gold that you can pass around digitally.
Yeah, so the main kind of blockchains you mentioned, Solana, you mentioned Ethereum,
Avalanche.
Might be Avalanche, and there might be BNB. Or are they?
Actually, I don't know if BNB. I don't think BNB.
Binance, do they?
Binance has their own coin. I don't know if they have their own blockchain.
Right.
I don't mess with Binance all that much.
Yeah. Either way, there's a whole heap of different blockchains. And for example, if you wanted to make a meme coin, and we'll get into meme coins and whatnot, as you said, you could build it on the Solana network.
Yeah, most of the meme coins out there are on Solana because it's very fast, it's easy, and it's probably cheap for the developers to get going.
Yeah.
So as meme coins go crazy, Solana should become more profitable.
Yeah. So effectively, what is crypto and what is the difference between the types of coins? That was the first questions. Well, crypto is a digital currency. And to be fair, this is the crazy thing, Nick.
Well,
Most of us
and that statement's a little shady depending on which country you're talking about.
Yeah, but most of us use a digital currency. Like we use dollars. But
I try to not touch physical money as much as possible.
Yeah. So to me, the difference between, normal Australian dollars and my, in the bank account, day to day, I use a digital currency because I never see it.
You're tapping your phone.
Yeah.
You might be using a card.
But in terms of the different types of coins, like there are thousands of coins. Yeah. And, if you're...
Tens of thousands, probably.
And what do they mean? Nothing. Like, realistically, they mean nothing.
Let's not get too existential here, because then we're like, what means anything? What is the meaning of life?
Okay, so what about, for the sake of this discussion, we move to, quote unquote, investing, and let's talk about, say, Bitcoin. So you and I both hold Bitcoin.
Yes.
And why would I invest in Bitcoin and not an ETF?
Sure. The big boys out there, Jack Maurer, Michael Saylor, Tom Lee, these people who are big Bitcoin advocates and have been for a long time, they are making the digital gold pitch. Tom Lee in 2017, when Wall Street looked at Bitcoin like it was the black sheep, they were saying, I think Bitcoin is maybe up to $1,000 at the time. So it had some growth, right? People had become millionaires, but it was still very, very volatile. People had, certainly Wall Street and institutions had their negative thoughts about it. Tom Lee wrote a white paper about basically the power of cryptocurrency, the power of the blockchain, and how Bitcoin could capture a chunk of the gold market cap. So the gold market cap above ground gold, I think, is like $21 trillion. It's a huge market cap. So back in 2017, he said, hey, I think in 5 years from now, by 22, Bitcoin, which is $2,000 a coin right now, could be at least worth $20,000. And then at the most, $55,000.
Yeah.
And people were laughing in his face, going, you're crazy. This is never going to happen. And obviously, we've now lived through that. And in 2021, it hit about $69,000 per coin. So Tom was right. And it was mainly doing that because it was capturing the gold buy. It's not necessarily replacing the NASDAQ or the S&P 500 or traditional retirement-based, but it is a flight to safety, if you will. Probably a little bit too correlated to the market right now, but it is growing exponentially, and it is much easier to carry on gold. Like if your currency is falling apart, which is what a lot of the people are saying, like America's, I think the US dollar is down 13% since Trump came in office. If your money was in Bitcoin, which some people might be like, are you crazy? Some people are living 100% in Bitcoin.
Which is ridiculous.
You say that, but the US dollar is down 13% this year.
Yeah, but the thing is,
we get excited about 10% returns.
No, but go with me. So you're saying people are like buying groceries and all that with Bitcoin, right?
Yeah. Or if you need to buy your groceries, you sell a teeny portion.
Which is also ridiculous because the daily fluctuations in Bitcoin is a lot more than the daily fluctuations in the USD or the AUD.
To both ways. Just like any chart, when you're looking at a daily chart, look at the movement of a US dollar on a day-to-day basis, you're like, wow, things are really flying compared to other currencies.
Yeah, but I think the difference is for most people, like if I'm using Australian dollars to buy my cappuccinos, I live in Australian dollar every day. So the price for me in relative terms, my cappuccino is $5.50 every day.
Sure.
But if I'm paying with BTC, I might get, it's got to trade back to my AUD. Right. So one day that coffee could cost me $7. The next day it could cost me $3.
Sure. But the people who are doing that, like Jack Maurer, I think is how you pronounce his last name, He's like the creator of Strike, which is like the Lightning Network that you can actually make payments on. He's creating a new Bitcoin treasury company. He has been Bitcoin only for a couple of years now. And as the US dollar has been dropping, Bitcoin has been going up. So yes, on a day-to-day, now if you want to buy a house, it might look a little different. But your Bitcoin isn't going to crush you.
So this guy who's living in Bitcoin, the banking system that he uses, it must convert down to USD at the point of sale.
Or whatever currency you're in.
Yeah, so there's still a conversion that needs to happen.
Sure.
So why bother?
Because you're converting it. Bitcoin could be up 10% while the dollar has dropped 5. You're up 15.
And what about transaction costs on a $5 coffee?
It's very small. Like we could do the research on it.
Look, I and this is why I wanted to get Nick on to talk about this, because I'm not there.
Sure. And I'm trying to get you there. That's what
trying to get me there. So,
but listen, let's just talk real quick. We've discussed the housing thing, and I'm going to botch the numbers. I'm going to round them up. I could look them up on my phone real quick, but I don't know where my phone is.
It's just behind you.
All right, so let's take a quick break while I look this up.
Yeah, all right. We'll do that. We'll be back right after this.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at sky.com.au. That's skye.com.au. And they'll point you in the right direction.
Okay, we're back. So what are you talking about with this house stuff?
Okay, so this is, again, it's not day-to-day like you're talking about. Your paradigm is still shifting. Let's talk about years now, because we're old enough that we can now talk in years. When you hit the 4-decade mark, you can look at years. In 2016, the average house price in America was $288,000. That would have cost you 664 Bitcoin. Mm-hmm. So 288 for the USD, 664 Bitcoin. 4 years later, housing prices went up. The house is now 328, so it's up $40,000. The Bitcoin price is now only 45. So 4 years ago, that house cost you 664 Bitcoin. 4 years later, 45 Bitcoin. 2024, the average house price in America is $434. So it's up $200,000, but it cost you 6 Bitcoin. So day to day, there is some fluctuation in Bitcoin. But when you look at 2016 to 2024, the house hasn't changed.
No.
The house has gone up in value, and what Bitcoin people are saying is the currency has devalued, making the real estate look more expensive. It doesn't matter to the average person because they're getting paid in U.S. fiat currency. It cost them $288 to buy the house in 16, cost them $434 to buy it in 2024, but it went from 664 Bitcoin to 2024, 6 Bitcoin. So had you gone crazy in 2016 and converted your life to Bitcoin, you could now buy a house for 6 Bitcoin.
But you also wouldn't, because most people wouldn't stomach the fluctuations that we've seen.
That is definitely something. It takes a paradigm shift and maybe a strong stomach, because you do hear it like...
But since 2016, there's pretty much, in terms of just Bitcoin, it's gone to the moon, right?
But even then, actually, the biggest moves of Bitcoin happened from like 11 to 16 or 17.
That's right, but
in terms of percentages,
yeah,
you're talking
are we
pennies.
Going to see those year-on-year major leaps?
Probably not. Michael Saylor, who is the chairman and head of MicroStrategy, now it's known as Strategy, their Bitcoin treasury company, what his projections and his quantitative math guys are saying, they plan on, if you're looking at the smoothed out, 29% per year, basically for perpetuity.
Really?
So he's saying, gone are the days of 1,000% moves, woe is us, but we think that it's going to average out 29% year on year growth.
And I think that's the whole thing. Like, as more institutional money goes into the asset class, because if you have a look at traditional research houses that would research a managed fund or a new financial product, and then they would look at it, and so that's it's probably part two to this thing is in institutional approved products, quote unquote, there might need to be a certain amount of funds in there, so that
a certain market
cap or something like that to make it. It's much like a share, right?
It's like the problem with Warren Buffett right now. It's like they're having a hard time to buy things because he's got $325 billion in cash. He could buy literally, I think, 325 of the S&P 500 companies. He could empty Berkshire's wallet, buy all those companies.
100% outright.
Yeah.
Yeah. Wow.
300 of the 500.
So he's tapped out of the monopoly game. He's done.
Who knows? They just sold all their BYD. We'll see what happens. But the problem is when you get so big, you need a market cap big enough.
Yes, but I think what I'm saying, we're now with particularly Bitcoin, the market cap is there and more money will go into it now because institutions are like, well, it's obviously got a certain size. It's been around. Not everyone's like, if 10% draw out, it's not going to crash the currency.
I don't know the exact company. Maybe you can put it in the show notes. But just 2 days ago, an American company was acquired at a 25% premium, and they're going to scrap the company. They just wanted to buy the 5,200 Bitcoin
within
the company had.
How funny.
So they paid a premium for the company to acquire the Bitcoin because it's hard to go out and buy 5,000 or 6,000 Bitcoin at a time. The market gets thrown off.
Yeah, interesting. The second question, investing in shares or any other investment, is it like investing in shares? Well, it's not, is it? Because traditionally, if you would purchase gold, it's a safe haven to store your wealth so it's not eroded by inflation.
Still a bit of a pain in the butt. So it kind of depends on what you're looking at. I mean, and maybe, you'll be able to talk differently to the Australian market. US-wise, I can go on Fidelity or Thinkorswim or Schwab or whoever, and you can buy a Bitcoin ETF.
Yeah,
if you just care about the appreciation. Like I own an ETF by Grayscale called BTC. It's the ticker symbol, and it every time you buy Bitcoin, every time you buy that ETF, they have to buy Bitcoin to back it.
Yes, and that's much like the gold ETF, GOLD in Australia.
Do you guys have Bitcoin ETFs yet?
Yep. So we've got one by Global X, EBTC is the ticker. And that kind of speaks to a way to get access to it. Sure, you'll pay 0.45, which it's probably okay. I'm not mad at that, but you know that it's their responsibility to store it and hold it.
One of the quirky things on when you really get into Bitcoin or any of the cryptocurrencies is your seed phrase, your wallet address. There is some things that you got to be pretty rock solid because there's not customer support that you're calling I lost my seed phrase. I have a few $1,000s of AVAX out there somewhere that I have lost my seed phrase, and when AVAX goes to whatever it's going to go to in the future, I'm going to be like, ugh. That $2,000 from 2021 is now worth $100,000. But
so I think I would probably say to her question, is it like investing in shares? Well, it's not, because when you invest in shares, you're buying a company, and that company produces an income, it invests, it grows. It's literally not like investing in shares. I don't think the word investing and BTC should go together.
Do you think that investing and gold should go together?
Ish. Well, okay, let me unpluck it. I use Life Sherpa Invest as one of my equity portfolios in my self-managed super fund. I think there's a 5% allocation to gold. So, but this is the thing with portfolio construction. You wouldn't call buying fixed interest investing, but it forms part of your portfolio as I guess it depends on your hedge. Or is this just semantics?
If I'm getting real, I invest in things to make a profit.
So, but the question is, you talk about in your book, The Quick Start Guide to Investing,
Sure.
building a simple 3-fund portfolio
Yeah.
that would have bonds in there, you're not really investing in bonds to make a profit. You're investing in the bonds to smooth out the overall portfolio. Yes or yes?
Yes.
So I think...
But you will be getting a dividend from those bonds. Like you're going to get some
a distribution,
payback.
please, out of a ETF.
Okay. Semantics again.
Yeah. And maybe I get stuck in the weeds.
And we speak in different languages.
Yeah, we do. We do.
But the point is you're trying to outpace inflation.
Yes.
The baseline of any investment is
that's
can
right.
I outpace inflation? I don't care if it's pork rinds futures contract, Bitcoin or
tulips.
Tulips. The point is anything can go crazy.
Yeah.
But anything can make you money if purchased properly.
Okay. The third question, what platforms can you use to invest in crypto? And are there different fee structures as well as with share platforms? So one, you can literally, if you want, and I think, we can talk about the other coins, but like I have not seen an Ethereum. Oh, is there an Ethereum ETF in Australia?
Oh, in Australia, I don't know.
Yeah, I'm not sure.
Either just rolled out or rolling out in the States.
So, and this is the whole thing with critical mass. A product manufacturer is not going to make a Trump coin ETF because they're just, there's just
the demand isn't there.
The demand's not there. There's no liquidity there, blah, blah, blah. There's a Bitcoin ETF, so you can log in, buy a Bitcoin ETF. It will track the spot price of Bitcoin, basically. So that's all well and good. You can use exchanges, and full disclosure, everyone, I use for my self-managed super fund, I use CoinSpot in Australia. And at the time of this, I wanted to see if they wanted to sponsor this episode because, we're doing it anyway.
I didn't realize we were getting paid. This is great.
Well, we might if I do, because they reached out and they're like, and I don't know, I just like, my whole thing with taking advertising money, it's one, if I genuinely use the product, I'm happy to get paid to promote it. Two, if I don't use it specifically, but it could be good for others to use, I'm happy to promote it. If it does harm, probably not promoting it. So who knows? There might be an ad at the top of this episode for CoinSpot.
If there's an ad at the top, this conversation doesn't exist.
That's
if they didn't give us the money, we're like, screw you, CoinSpot.
Yeah, and we'll also bleep out the name.
Ad with blah, blah, blah.
Yeah, exactly. So look, there is, in terms of fees, so for example, with CoinSpot, there is no quote unquote fee. However, there is no quote unquote fixed fee, but there's generally a spread.
You're paying a premium.
Percentage. So
which honestly, that's how everything works. Like every broker that at least in the States, I guess I can't talk to the Australian audience. In the States, if you're buying something, there literally is a bid-ask spread between everything.
Yeah.
So you as the seller might sell Apple for $200. The buyer might buy it for $201, and the company in between is keeping that buck.
That $1, yeah. So there's a spread. There is the other purest way to literally buy the tokens and store them in cold storage, which is like on your thumb drive or your SSD or...
But even there, you're paying somebody something at some point.
That's right.
Unless you literally have a friend who has cold Bitcoin and you're like, hey, can you send it to me? I will give you this pile of money, which I'm sure the government would want to know that transaction happened. But even if you go to a Bitcoin ATM, do you guys have those in Australia?
Oh, I've seen them pop up.
So
maybe.
Like there's going to be a spread there. There's a spread everywhere, no matter where you go.
And that's like with the currency converters everywhere, they advertise no commission.
Oh, yeah.
It's like, yeah, sure, but there's a spread that you're getting screwed
getting
on.
A terrible rate, yeah.
Yeah, so look, nothing's free in this life, and it's okay to pay fees if you want to use services, and an exchange is a service. Now, for example, CoinSpot, they will connect all the different networks, and you'll have wallets there. You'll have a BTC wallet, you'll have your Solana wallet, you'll have your Ethereum wallet, and you can literally exchange your currencies across different wallets because it's theoretically and practically an exchange. So you can buy BTC and other coins anywhere. And we'll get on to some more of those altcoins and stuff in a moment. The question here, number 4, apart from being an amount you can afford to lose, how much should the average person dabble? And how much would it make a difference if you invested it today and it went to $1 million? So we were kind of arguing as we walked to a cafe this morning that was just down the road. Next minute, I don't know where you took me, but it was hot and we went to a cafe.
It was a bit of a walk.
And we're talking about like percentage of net worth or rules of thumb and guide rails, where I'm a big believer in, and I worked it out. I don't think the only cryptocurrency I own at the moment is BTC, Bitcoin.
Those are rookie numbers. You got to pump those numbers up.
And I don't have much, like 1% of my net worth. And you're like, nah.
But that was, what did we decide? That was like 25 Bitcoin?
I wish. So my kind of rule of thumb with anything, would you say Bitcoin, and this is I think where we need to actually delineate from Bitcoin and potentially, or delineate from top 5 or 10 coins as risky as opposed to the rest of the thousands. Because I think what I'm saying is when it comes to alternative investments, we need some type of guardrail in our life. Now, if I'm wanting to buy some Cum Rocket coin, and there was a coin called Cum Rocket, right?
And there is, yeah.
And there is. I'm not putting thousands and thousands of dollars in that or more than 1% of my net worth. I'm just not, because there's a high chance it's not going to the moon. There's a low chance it is going to the moon. Now, the problem is with diversification, if you've got all your eggs in one basket and it gets wiped out, you'll get flushed. But if you had a small amount in there and it went to the moon, sure, it could be good money, but it's not going to hugely change your life. But I think, and I'm just throwing you all this stuff and you can comment on it, if we look at the top maybe 5 coins, so your Bitcoin, Solana, Ethereum.
In order, it'd be like, if you leave out the stable coins.
Yes.
You're probably looking at Bitcoin, I would say Ethereum,
yeah,
maybe Solana,
Ripple, BNB,
Ripple, and
Solana, Dogecoin, please give me a break. Even your top one, like your top network coins, your Ethereum, Ripple, Solana, Bitcoin, they're probably not quote unquote speculative coins because they're the infrastructure tokens, right?
Especially the top 2. Like I look at Bitcoin and Ethereum basically as non-risky assets at this point.
Yes, and that's what I'm getting at. And so you have got a significant, like you own 2 Bitcoins.
Yeah, I've got other crypto. Like if you look at pure crypto, and right now, like I'm making my money off of my money, right? So like I need my money to be a little bit of speculative as well as having a nest egg. And my nest egg is like, I can always go back and get a job.
Yeah.
Like that's lame. You don't really want to do that, but I am trying to ride the momentum of like this like last third year of the crypto bull market. So we're recording this in 2025. It's probably going
we're at the end of September.
It's probably going to start slowing here as we come into Christmas, January, February next year. And we can talk about the halving and kind of why that happens. But I'm probably over leveraged more than I would want to be historically.
Right.
But as the time of this recording, I probably have 40% of my net worth tied to Bitcoin and Ethereum.
Yeah, right. And so I'm just not prepared to have that money in there.
I'm not saying people necessarily should. It might even be 30.
Yeah. But either way, so you talked about, because I said rules of thumb, and you talked about risk tolerance, which it's
sure.
Both are accurate, right?
Yeah, like I do have like rules of thumb where, you want to rebalance a portfolio. You probably shouldn't have more than 10% of your portfolio in one position, whatever that is.
Outside of a broad market index.
Yeah, outside of like an index.
Yeah.
So
you satellite. So if you had a 40% Aussie equity and a 30% US equity, you probably wouldn't want.
And another caveat that I put into this equation is like, what is this for? My retirement portfolio is very boring. It is 3 broad market indexes and a little bit of Bitcoin ETF. Like I don't mess around. I don't play with it. That's what it is. My investing account is almost all individual stocks. There's like 10 individual stocks in there that I've done research, that I've looked at the companies, that I've decided what I think is going to be good, and I like those, and I'll change it as things happen, and I'll rebalance maybe a little bit. And then I've got my dividend portfolio, which I'm looking at yield and risk and things like that. And then I've got my investing portfolio, which I'm probably more, or my like kind of living investing, my trading portfolio, which I'm more speculative in because it's generating the yield that I live off of. So even in terms of like benchmarks, like I would ask the questions like, is this your only money? Is this your retirement money? Are you going to look at it daily?
And I think, so to the question here, like how much? Well, I would pretty much say if you invest outside of market norms, you will get an outside of market norms result.
Yeah, and you will feel the volatility more on both sides.
That's right. So that could be outside market norms results really good or really bad. And I think it goes back to that. We only put money in things that we understand. Now, if Trinity rocked up and was like, I've got $10,000 to invest, how much should I put in Bitcoin? I'm like, well, number one, you don't have to. You don't have to. You don't have to buy gold. You do not have to. But if you did want to scratch that itch and get exposure to cryptocurrency and Bitcoin, and there'll be people listening who are saying, oh, it's all a scam and all that. Well, I don't know if we can actually use that word with Bitcoin. Sure, replay this in 20 years, see what happens.
Caveat, there are lots of scams out there. We have named a few of those coins that would probably fit that description.
Yep.
And anyone can create a coin and do a rug pull and scam. And
yes.
So a lot of the people are getting caught, and I hope they all get punished.
Yeah.
But when you're talking Bitcoin, when you're talking Ethereum, those two specifically, they are here. Institutions are buying into them.
They're not going
If you
anywhere.
think they're a scam, you think the stock market's a scam, that's the same conversation right now.
Yeah. So if someone's like, I got $10,000 and I want to buy some Bitcoin, what should I do? I'm like, I'm probably not putting more than $500 to $1,000 exposure. What would you do?
I'm saying, well, what other retirement assets do you have? What are you looking for? If this is like,
so this non-retirement just in your ordinary money.
Let's say you won $10,000 at the casino, or your aunt,
I know someone who did that.
Your aunt passes away and you get $10,000. You weren't expecting this. You don't need it to pay off your car. Obviously a financial advisor would say, do this, and this. Pay off your debt if it's huge. If you don't have any debt and things are going well, I'd say put that 10 in Bitcoin.
Yeah. Okay. There we go. And that's why, like, I'm a conservative type individual. I'm like, I don't know. So you've got between 5 to 10%.
I get a caveat. If it's like
5 to 10% to 100%, pick a number. There you go.
Sure.
But I think it goes back to education and understanding. And I think for me, I 100% know the blockchain technology is legit. It's real.
Yeah, it's trackable.
Yeah, I legitimately know that Bitcoin, and particularly Bitcoin, is not going anywhere. Like, I just don't think it's going anywhere. There's a limited supply. There's only 21 million coins. Institutional money is walking in. It is a fixture. And the next generation of people, they're not going to be buying, like, look at your kids or, people joining the workforce who have grown up online. They're going to be buying Bitcoin.
I'm going to sound like a maxi here. A Bitcoin maxi is like someone who's like all in, right? And I'm really not there, even though it might sound like it. Maybe like this is my awakening where I'm like, oh, I am a maxi. Wow, look at me.
Compared to me, you're a true believer.
True. Yeah, I do think that I've swallowed whatever color pill Bitcoin is. Let's call it orange. So anyway, where I was going to this is I've been putting $100 a month into my kids' college funds. I've got 2 boys, 7 and 4, and so I'm putting money into their college fund. 4 months ago, I halved that, and I now put half into the college fund, which is going to the S&P 500 index, and the other half I'm buying Bitcoin for each kid each month. So I'm dollar cost averaging into Bitcoin for the kids as a super long-term bet.
Yeah, okay. So look, the question is, how much do you want to put in? Well, risk profile, maybe a rule of thumb, my kind of approach. Question 5. Or I don't know. That's how much. I don't know anything actually. Apart from the increased volatility, are there any major risks to investing in crypto? Okay, and this is where we have the fork in the road. Are we talking about coins like your Bitcoin and Ethereum? Well, the risk is certainly lower than some influencer online creating a coin, geeing everyone up to buy in, then they sell 30% of it, take a heap of money off the table, and the price drops to the floor. That's a rug pull, that's a scam. So they're the major risks in investing, quote unquote, in new coins, in altcoins, in Dogecoins, in Shiba Inu coins. And to be fair, I've made a lot of money playing around with all these altcoins, and I've stopped because it was too dopamine-y for me. Remember like years ago, we were like in the Web3 and we're looking at like, what was that, Jade coin or something?
I didn't say it. I love it so much. I miss you, Jade protocol.
So these were these protocols. What were they?
It was DeFi. It was
DeFi.
It was the new decentralized. You're getting paid incredible yields.
Like I was getting 900 US a day for like 3 weeks.
It was
wild.
It was like 20,000%.
It was, and I'm just like.
Obviously, we knew that was going to go to the toilet.
And it did. And we got our money.
We got the toilet quick. Usually.
Yeah. So, we were like really in DeFi, Web3, wild, dark corners playing around, printing money.
Literally being transported back to my old living room.
Yeah. And
that.
So for me, that's such speculation and wild.
And we knew it at the time. 100%. Like every day I wake up, did it crash today?
Yeah.
Is it gone to zero? Because that was the expectation.
Yeah.
Where Bitcoin, Ethereum, no expectation
as
for it
soon
to
as
happen.
The Trump coin got announced, I knew that it would go to the moon, and then I put in, I think I put like $1,000 in or something, 10 grand. And pulled out 18 grand. Like I did a smash and grab on that.
The lucky ones.
Yeah. But
a lot of people got burned.
Yeah, but I was like, it was literally on a Sunday night on my lounge. I'm like, I know this is going. I think it was like $10,000. I'm like, I'm going in, and I doubled it, and I got the hell out.
I like this dichotomy,
which is weird because I'm risk averse.
40% of my net worth in Bitcoin, blah blah. And you're like, you're so risky. And I'm like, I'm not even going to touch these crazy coins at all. And you're like, I'll just put it in a smash and grab.
Yeah, I'd say I'm into a smash and grab, but I'm not into wholesale net worth
yet.
The power of yet. Yeah, maybe I'm risky in different ways. Maybe that's
the rest of the statistics out there.
Maybe the dopamine hit.
It is a less than 1% chance that you not just lose all of it, that you lose money in Bitcoin after 3 years. So if you bought
old enough to have all these big claims.
Well,
is it
14 years of tradable Bitcoin at least?
But when was the last GFC?
2008.
Yeah. There hasn't been a GFC since. There hasn't been a huge crash since.
And maybe, maybe why? Because Bitcoin is created out of the ashes of the global financial crisis. Satoshi is like, the world is a hot mess. If you let bankers create collateralized mortgages and default swaps and all this other stuff, maybe we need something that is out of the government's hands.
But this is the crazy part. When markets tank, Bitcoin does the exact opposite of what it quote unquote should do, which is
what it used to do at least.
Well, like because if the S&P had a bad week.
Sure.
BTC had that. It's like, no, why is that correlating?
We aren't smart enough to really dig into the weeds, but Raoul Pal, I think, is, and he talks about how Bitcoin now, because it's getting so institutionalized, is following the money trail. So when you look at the M2, like liquidity, he thinks that's what causes the big swings in Bitcoin. Right. A lot of people think it's the halving, which happens every 4 years, and that's when the Bitcoin mining community, the amount of Bitcoin to be able to be mined gets cut in half. And it's roughly every 4 years. It works on how many Bitcoins have been mined. So a lot of people are like, every 4 years, Bitcoin has 3 good years. Green, green, green. And then it has a Bitcoin winter or a bad bull market. And those drops can be from 40 to 75%.
Where are we at the moment?
We are quickly approaching I think it's 1,500 days after whatever the last fall down. So we are, by February, we should be definitely at market top. February 2026, maybe even January or December.
Is this Bitcoin rainbow chart still legit? Or is it
Why? Because it says buy now. It's like, does it say Glen James buy here? I think that might be a pop-up window. Ignore that one, but the rainbow chart, I think it still has some stability. What does it say right now? Or
well, it says at the moment, buy.
Yeah, just regular old buy.
Yeah.
Sure, that's level-headed. Go for it, chart.
Yeah, okay. Hey, I think that's the thing. If you're talking about long-term hold, different with Bitcoin and Ethereum as opposed to me doing a smash and grab on a Sunday night for some dopamine.
But again, I am talking long-term, not just like short trades. So 3 years, nobody's lost money. Even if you timed it the worst timing ever, and you bought at the top, if you held for 3 years, you didn't. It's statistically less than a 1% chance that you lost money. At 10 years, literally, it's impossible. And now again, the 10-year thing shows to how quick the market is. But when you're looking at things that you think are like safe stocks, let's talk about United Healthcare. Like United Healthcare is the largest healthcare provider in America.
Right.
Hugely profitable business, gigantic company. It's a boring sector like healthcare, right? What can go wrong? Well, you've seen this year, 2025, drops of 20% a day in a thing like United Healthcare. So the world is basically becoming more volatile, and Bitcoin actually is looking less crazy, less volatile, less risky as time goes on, to the point that American banks right now are doing Bitcoin loans where you buy a property like, I think the first one was in Tennessee. Somebody bought a 30-unit apartment building. The bank made the individual add in $2 million of Bitcoin collateral. After 4 years, he was allowed to sell the Bitcoin. That's only like year one right now. And they added the Bitcoin into the overall package of the loan to lower the volatility and the risk profile. So banks are actually using Bitcoin as a collateralized loan obligation to lower their risk of loaning out. So the apartment building could go belly up. It could not make the money. Anything can happen. But the bank's like, in 4 years, we think Bitcoin will have grown so much that we'll get our money back on this loan no matter what.
Interesting. So the volatility, the huge volatility you think is gone?
Yeah, like people are freaking out now. It's like, Bitcoin's down 5%. Like that used to be like an afternoon. Like that was nothing.
Yeah.
There still will be volatility. And I do think that most likely 2026, you will see Bitcoin falling down 40, 50%.
If someone had $10,000 and they wanted to or $1,000, they just wanted to buy a portfolio of crypto, what would you suggest? Like a 50% BTC, 40% Ethereum, 10% Solana?
Of my percentage of crypto, I am probably 94% Bitcoin, 5% Ethereum, and like 1% Solana.
Right, okay. Are there any other major risks to investing in crypto? And that's it, like if you're buying shat that's just, you log into all these exchanges and like, here are the new coins and all that. Nah, it's rubbish. Like, it's speculation, a lot of that stuff. So I think you've just got to look. If you want exposure to this asset class, stick with the big dogs. And how do you keep Bitcoin safe? Is losing Bitcoin an issue? Well, I think the ETF is probably the safest way, do you think, at the moment?
On a ratio of safe to ease, yes. Because most likely...
Like you'll pay 0.5%, but
right.
pay for that, the custodian...
I don't think that the exchange is going to... Like, they're going to make you whole if something goes wrong. If it gets hacked, it's going to get whole. Like, in 2018, the Mount Blanc, whatever, there's some exchange that basically went belly up, and millions of Bitcoin were lost or stolen. Like, that is kind of an old fear. People used to say, if your money's on the exchange, it's not your money. If you don't have your own keys, it's not your crypto. But now with the Bitcoin ETFs, like, you have protections that the Australian or the United States government has put into place Now, the true Bitcoin maxis are, if there's anyone listening to this conversation, they're probably not. They're thinking, no, you dummies, you have to be in cold storage. You can't even be on an exchange. If you don't hold your own keys, it's not your Bitcoin. They're holding Bitcoin waiting for economic currencies to fall apart, not as a way to make money.
Yeah, and like, so if you did purchase the Bitcoin eBTC, Global X 21 shares Bitcoin ETF, the custodian is Coinbase Custody Trust Company LLC. If someone hacks that custody and steals the coin, that's their problem to ensure the Bitcoin. Like,
I would assume so.
That's what I'm pretty much saying. So look, we've covered a fair bit of ground. I don't know if we actually answered anything big, but it was fun.
Did we answer one question at all?
Yeah. Stable coins. Just come back to that.
Yeah, sure. Stablecoin is basically, it's paired to something. A lot of them, most of them probably are paired to the US dollar.
So was it Tether that went under?
No, Tether goes under.
What went under?
Crypto's in trouble.
What went under?
Because Tether's claim,
Terra. Yeah.
Terra Luna.
But it's okay.
I got that one just in time.
Yeah. So
Tether's the second largest cryptocurrency
Yes.
market cap.
So effectively, Tether is on the Ethereum ledger.
Sure. You got a computer, not me.
Yeah, I'm just having a look here.
The conspiracy theorists are on Tether right now is they're claiming to have XYZ number of Bitcoin backing
The cash.
all of the cash that they've collected. And with the new stablecoin legislation, Tether is kind of going to have to open up the books for an audit. And if they don't hold all the Bitcoin they say they hold, it could be a huge shakeup. And that is what could cause the bear market in 2026. I don't think they'll get audited that fast. But it's a lot like, I don't know if you guys caught the news in Australia, that when Trump came into office, he was going to do a couple things. One of those things everybody knows was going to release the Epstein list, right? Still waiting on that. The other thing, he was going to end the war with Ukraine and Russia on day one. Still waiting on that. The other thing that he had promised his supporters, he was going to audit Fort Knox. Day one, Fort Knox was to keep all of the gold in America. It was going to get audited. We're day like 300 into this presidency, 280, whatever it is. No audit, no whiskers, no nothing.
So the
theory is and they're like, ooh.
That's the theory that there's not much gold in Fort Knox.
Right. And the audit all of a sudden disappeared once he got in office. The same problem could be happening with Tether if they're saying they have all the Bitcoin and they don't. That is going to be a scary time to be in.
Theory, with the open blockchain, it could be able to be traced, right?
Why don't you do the research? We'll find out.
So anyway, Tether it's literally a stable coin. One Tether is one USD, basically.
Yeah.
And I think full circle back to Australia, I think potentially, and I just think the regulation is so nuts it would never happen, but sovereign governments probably just need their own stable coin currency.
Yeah, and that's what the stablecoin legislation that the U.S. Congress passed.
Like an AUD.
It's going to be literally a USD. I mean, that's already its own stablecoin, but there'll be some sort of America coin or something.
Yeah.
That will be happening.
Because that was the whole thing, is like, it's not worth anything unless you can settle a government debt. That's the whole premise of crypto, like the other case. There's no intrinsic value there. But is there intrinsic value anywhere?
Not as your currency, your fiat's falling.
Yeah, gosh. Well, we'll end it there. It was a bit of a chat, and again, we just kind of do these podcasts for infotainment. Maybe you've learned something, maybe you've been entertained. Nick, your YouTube is
15-minute money.
You can check that out in the show notes, and we might end it there, and we'll come back and do a little short after party, and we'll explain a couple more things about Nick, and we'll be back at the after party. Bye.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorized representatives of Money Sherpa Pty Ltd, which holds financial services license 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.
All right, if you are into this podcast, sometimes we do an after party. We just kind of chat. So effectively, Nick used to run the This Is Investing podcast, and it wasn't a huge podcast, but there was a lot of listeners who enjoyed it. And for years, probably since 2020, I said to Nick, you've got to do a YouTube. And he didn't. So I basically made him do one. I said,
let's not give you too much credit. I think that was in 2022 you started that. I'd already been doing the podcast.
Sure. Either way, I wanted you to do your own YouTube for your own benefit.
See,
because I think the thing is, a lot of the content Nick does, it's truly international, based in the US, and we had chatter from people wanting to do, wanted more Aussie-based content. And I was actually thinking the other day, and this is new to my team who are listening and watching and new to the community, I probably do need to find an Aussie host for This Is Investing.
Isn't that you? No?
Oh, I've been doing it and I've been enjoying it. I'm doing these 10 questions. I don't know, I want to do less, but I don't know, if there was the right person who could do This Is Investing in Australia, potentially Newcastle, come into the studio, reply within, let me know. Because I think it does need an Aussie, particularly for our audience. So anyway, so you're putting a lot of effort into the This Is Investing podcast, and I knew that effort could actually get more benefit if it was on YouTube. And you put up some YouTube clips that had 15,000 views, right?
Yeah, so I'm on I don't know, my 11th or 12th episode, just kind of really started. And back in the day when we had gone to the financial conference and kind of both got motivated for YouTube, you were able to put the stuff into work. I had 2 kids slow me down, brand new baby at home. My mom had passed away, so it's
sounds really, like you had a heap of excuses.
I had unfortunate life happening. And it took me to actually move to Spain, do the fire thing, to I guess have more free time and more.
Yeah.
I just traded all last year, and that's all I did. And I felt kind of like a creative blah, I guess. I was doing the This Is Investing podcast as well, but it is kind of fun to learn what video editing is like and maybe kind of what happens. And right now I did an episode on Bitminer, ticker symbol BMNR. That's Tom Lee's Ethereum treasury company. So it's the Ethereum's answer to the Bitcoin, which is Michael Saylor's strategy.
Right.
And basically it's a company that's just acquiring Ethereum. They're not trying to make products. They're trying to acquire as much Ethereum as possible. Now, they probably will come out with preferred shares and some other stuff. The one kind of fun thing with that company, and that's the one episode I did that, I don't know, it's 15,000 views or something right now, is you can take your Ethereum and you can put it on the blockchain and it will actually create yield. So as Bitminer puts all of their stuff back on the blockchain to help solve, how they're doing the blockchains changing up over their Ethereum, they'll actually get paid back. I think they're going to be, right now, scheduled for 200 million a quarter or billion in yield coming back right now. So
what's the point you're making? Sorry.
I don't know. What was the point? I don't know.
I told you to do YouTube.
I think I started pitching, Tom Lee's company instead of on YouTube.
Yeah. And I reckon just from you were not getting 5,000 listens on This Is Investing podcast. So I'm I would rather you put the effort into your own YouTube that you own and that you can make money from. And I think it's good.
Yeah, I'm having a good time. So I'm focusing a lot on it's still kind of the same shtick as This Is Investing, but it is going to morph a little bit more to kind of fit what I'm doing with my life. So I'm talking about options. I'm showing people weekly options trades that I'm doing, some stuff that I'm thinking about. And then I'll have some other things like the BitMiner episode where it's like, hey, I think there is an opportunity here that I'm going to take advantage of. So like with YouTube, they're really getting a lot more strict with the financial advice and stuff like that.
Really?
So like a lot of people that have been watching for years are now starting every episode with this is not financial advice, this is education.
Right.
So I think they kind of smack people's hands a little
But
bit.
that would be more the US regulator than quote unquote YouTube.
I don't know. Maybe they're getting heat. I mean, what is a U.S. regulator? I mean, the president of the United States has his own meme coin. Like, doesn't seem like there is any regulation.
So in Australia, you only need to provide a general advice warning if you've got a general advice license. Like all these people out there doing property episodes and all this, saying, "Oh, this is general advice." Save your breath.
Well, remember when we were at Fin, did you go to the show at FinCon, or not the show, but like they had the SEC there, and she was like. People are like, well, I give financial coaching. They're like, nope, you're a financial advisor according to the FINRA rules, and you're going to get in trouble. And 150 creators are just sweating because their whole business is built on wealth coaching or life coaching or financial coaching. And basically the United States government was like, no, you are an unregistered financial advisor.
Anyway, well, that's it. Nick's doing his own YouTube. We're doing videos on every episode now, so I hope this has been a bit of fun to listen to. I've just, been spending the week in Spain. We might do another episode this week.
Let's go up to the mountains and do it on the top.
I want to do an episode about what do you do when you don't know what to do in terms of a financial plan.
I think every day I don't know what I'm doing, so that'll work.
Yeah, we've got a special guest for that. All right, see you, bye.